morning, morning, morning. Morning, everybody. Welcome to the session. Good morning to those of you joining on Teams, and a special welcome to those joining on my TikTok live stream. This is the first time I'm streaming this live on TikTok. This is normally a Microsoft Teams exclusive event that is by invitation only, but we thought we'll invite you guys to come and see what we're talking about, and if you're interested, you can send us a mail. Maybe we'll invite you to the next session so you can also see the slides that we prepare on this. All the videos, as per usual, on these sessions are recorded. They are uploaded to the Unicus Tax YouTube channel. And I just want to do this. The Unicus Tax YouTube channel. So today's discussion is SARS VDP guide number 2, the long-awaited VDP guide number 2. There has been, in case law, 2 major judgments, which of course they had to take into account. The one is Purveyors and the other one is Medtronics. Right, but I don't want to discuss the whole thing. I'm just going to talk about key changes because there's nothing in here, like I've said elsewhere, there's nothing in here that's new to us, but it is important that everybody who's not familiar with the VDP process and deals with it regularly, that they also know what's going on. As per usual, for the guys joining online, this training is for your interest only. It's intended for my staff and can be relied upon by my staff. Right, so the key changes. Right? The purpose of this session, like I said, is not to go into VDP in general and to train you on the general principles of VDP. I want to highlight a few very specific areas that SARS have highlighted in their updated version 2. Right, so they do touch on the customs and excise, which now has its own VDP. It's legislated, but it's not enforced yet. And I think the point I just want to reiterate is of course, you can't VDP, at least in terms of the TAA, customs and excise breaches, right? You can only VDP breaches that fall within the ambit of the TAA, right? So, but customs now does have its own promulgated VDP, if it were specifically for customs in the Customs and Excise Act. It is legislated, but to my knowledge, it's not yet enforced yet. It will be enforced on a date to be promulgated. All right. So key changes to the VDP guide, right? And I've fine-combed this because we work in VDP every day. And this particular thing that I want to touch on here is a new wording that has been added to the guide, and I can with fair amount of confidence say this was in direct reaction to a review application we launched against them in one of our applications, which they rejected. We took them on review and the matter was settled, right? But the issue was, when is an audit considered concluded? That's the issue, right? In the case that we dealt with, what had happened is there was an audit findings, and it turned out that the facts were incorrectly disclosed to the auditor. When the client came to us and said, well, that's the wrong facts, your assessment won't stick on those facts, but there's another problem that is not in your audit findings. So what we said is well, VDP, the other issue, after the audit has been concluded, and then we will respond to the audit findings and say, listen, you've got the facts wrong. It's not your fault, SARS, but you've got the facts wrong. And then SARS said, no, you can't VDP because they reject the VDP because they say that the audit was not completed, right? That was their logic. But then the letter of audit findings was issued. And SARS's old VDP guide had said, in fact, when you look at section 42 of the TAA, that's exactly what it says. It says, upon conclusion of an audit, SARS must issue a letter of audit findings. And even in their first version of their guide, it said an audit is concluded when a letter of audit findings is issued, right? And of course, we pointed that out to them in our review applications and in our objections, if you will, to their decision to reject. And what they've done now is, and funny enough, I've taken this up with SARS and I've gotten their view, which I'll explain in a minute. I've taken this up with senior legal officials in SARS to say, hang on, what is this? Because this wording that they changed here to say that no, an audit is only finalized when a finalization letter is issued, which is a very different point in time in an audit process, or in the process of engagement with the taxpayer. It's after findings, after the response, and then finalization. And they said, no, their position is an audit's only finished once the final assessment has been issued. That wording that they added in what is now the published version of the guide was not, to my knowledge, in any of the draft versions that was sent out for public comment. It was tagged on, the wording and the relevant assessments to give effect thereto was tagged on in the final version, in my view, in reaction to our review application that we launched, right? And then I took it up with SARS, senior people in SARS, and I said to them, listen, guys, with respect, I think that this, first of all, doesn't seem to have been in the drafts that were out for comment. And second of all, it's wrong because they cite section 42 of the TAA in support of that. And I said, look, I think it's wrong. And they said, thank you, we'll look at it. And they considered it, and they came back and they said, no, they will remove the reference to Section 42 because presumably they agree that 42 is not authority for an audit that's being concluded when a finalization letter is issued. But they said, no, their view is that an audit is finalized after the finalization letter is issued. Because it often happens, they say, that after an audit findings is issued, SARS does further audit work, and then the finalization letter is issued, and it can be substantially different. And my response was, well, look, we're going to agree to disagree on this interpretation, but you cannot do that. In fact, that position that SARS takes to say, no, an audit is not finalized because they can do work after the audit has been issued and then issue a finalization letter that is substantially different, is a breach of PAJA, the Constitution, and the purpose of Section 42. If SARS finishes an audit, they issue a conclusion letter, right? You now respond as taxpayer, which is what Section 42 envisages. Yeah? Now, of course, the auditor can do further work, but if the auditor then issues an assessment substantially or materially different to what you responded to, right, then effectively SARS has robbed you of the opportunity to respond to that assessment because you responded to an entirely different assessment. And so the argument is quite simply, if SARS has a different view, I'll point that out, SARS has a different view, I disagree with their view, but respectfully, if you finished an audit, you issue a conclusion letter, that's done. The audit is finished. If you do work after that, issue a new notice of commencement and issue a new audit finding so that I can respond to that. But if you're going to treat Section 42 as a mere formality in the sense that once it's been issued, then I can just move to finalization letter after that, I think that is seriously a breach of 33 and PAJA, and in this case, in particular, Section 42. So they said they're going to update the guide to take into account their view that an audit is only finalized when the finalization letter is issued. I said to them respectfully, I disagree, but I respect that that's your view, right? So I can guarantee you that when we get to those matters, we're going to end up with another review application. We'll see whose interpretation stacks up. Like I said to SARS, I think the interpretation, respectfully, is influenced and tainted by procedural and practical limitations. I think they're straining their interpretation a little bit, but look, I mean, that's their view. And be that as it may, know that their view is after finalization is issued. So in other words, when the assessment is issued, that's when an audit is done. Right. Timing of the VDP is important. So this is kind of the point that I've already made. So the timing of the VDP, if you want the path of least resistance, do the VDP if there's a VDP to be done after finalization of an audit, right? But I don't think that that's necessarily supported in the legislation. But know this, that I don't know what this means. I'm terrible with TikTok. There's something people asking me stuff. I'll look at your questions now. Right, shows my age. So, right, so I think everybody's laughing at me, all the young people. All right, so take that, the timing is important. Then, of course, what SARS says, and this is crucial, we all know that if you apply for VDP and you're under audit, then there's the automatic exclusion. You can't VDP unless a senior SARS official admits you because they wouldn't have found and blah, 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 blah. We all know those requirements, right? But they stress the point in issue 2 that SARS can, if there's a verification, also reject the VDP application. And their view is not that a verification is an audit, which it quite simply is not. In my book, I have however many pages about what's the difference between an audit and verification, because there is a difference. It's not exactly the same. And SARS says, yeah, they agree. It's not the same. So the mere fact that you are under verification is not an automatic exclusion under Section 226. Where they hang their coat on is to say, if you are under verification and that verification prompted you to do a VDP, then your disqualification is the voluntary requirement under Section 227, which is the distinct and separate requirement, as we know from the Purvey's judgment, right, in the SCA. So the argument is if you're under verification, it's not an automatic exclusion, but the facts and circumstances will dictate, listen, are you just bringing this because there's a verification pending, because you now think that SARS is going to catch you, in which case, of course, the voluntary requirement is not satisfied. We had a case like that recently where SARS did a verification on an individual for what was in essence, now Gabby isn't here, but what was in essence an RP5 check. But the request for verification was so wide that it included all sorts of income that was not disclosed. It was exempt income, but it wasn't disclosed. The request for the verification request, you could see in the circumstances of the case, the verification request has got nothing to do with that income, right? You can see in the context how the filing happened, how the verification came out, the adjustments SARS made. You could see it's got nothing to do with that. But like I said to my client, if I was acting for SARS and you bring a VDP, not that I think you can because everything is exempt, right, or not taxable for residency issues, but if you bring a VDP now, they're going to reject it, right? Even though I can fairly confidently say from my experience that verification has got nothing to do with this income. They don't know. But your call to me about what must I do with this was prompted by that verification. And so SARS would be right to reject it in the circumstances, right? And so I just double down on that point in the updated guide, so that's important to take note of. Right, so SARS doubles down again on the purveyor's judgment. The point is that an application must be voluntarily made. The purveyor's judgment, so what happened in purveyors is the taxpayer imported an airplane, or I can't remember if it was the fixed wing or a chopper or what it was, but they imported an airplane and they were unsure about whether they're supposed to charge the VAT on it, and they went to SARS and they asked SARS, should we pay the VAT on this, on the importation? And SARS said yes. And because you didn't, client or taxpayer, there's a penalty. And then they applied for VDP relief and they said no. That's not a disclosure, first of all, and second of all, that's not voluntary because you brought the application out of fear of penalties. Right, so that's what purveyors ultimately said. A voluntary application must be brought out of with no element of compulsion underpinning it. The way SARS seems to interpret this is simply as if SARS has reached out to you in some way, shape or form, and because of SARS's action towards you, or SARS is reaching out to you, you then bring the VDP. That brings the purveyor's principle into the scope. And therefore would result in a VDP application being rejected. I still maintain that I think the purveyor's judgment goes further than that. Technically speaking, when I look at the wide meaning that the court in purveyors gave to voluntary, I would venture to guess that no single VDP application has ever been submitted voluntarily, because all penalties are brought out of, all VDPs, I would venture to say 90% of them are brought out of fear of criminal prosecution and penalties. And so yes, it's true that SARS might not necessarily have reached out to them, but think about all this correspondence that's going around about FACTA and the exchange of information and the crypto exchanges. I'm getting lots of calls from people saying I need to VDP because I'm scared SARS is going to catch me. If I apply the purveyor's principle strictly, right, then none of those applications will effectively ever be voluntary. And I made this point years ago. I said that the purveyor's judgment effectively, depending on the interpretation, killed the VDP process, right? SARS's view, however, seems to be no, that's not as wide. We have to interpret the judgment on the facts of that particular case. And on the facts of that particular case, there was a SARS official who reached out and said, no, you have to charge that and there's penalties. And so they seem to be limiting it to SARS as making you aware directly of an issue, or you react directly or in response directly to some form of contact from SARS, then of course the voluntary requirement will not be met. This thing that they did here, honestly, I mean, I made a video about this before. I often wonder, and I haven't taken this up in defense with the SARS officials because I don't think there's a point, but maybe I will. I often wonder how much of their guides are drafted by policy and how much of it's drafted by proper interpretation of legislation. Because one of the requirements for VDP, right, you'll all know, is that the default must result from some form of behavior in the understatement penalty percentage table, right? Now, that wording used to read, I think it's 227D, right? It used to read before 2015 that one of the requirements for a VDP is that the default must result in, or must have resulted, or could have resulted in the potential imposition of an understatement penalty, right? That's how it read. Then in 2015, the legislator amended section 227D, and he said, or she, or it, right, said, I'm removing this requirement because the SARS VDP unit is interpreting the requirement as meaning you cannot apply for VDP if there's no possible USP. And so they changed the wording to say it doesn't have to result in the potential imposition of a USP, simply that it must involve a behavior, right, in the USP table. Then SARS in their guide goes and they say, no, when you read the VDP provisions in context and for purpose, there must be the potential imposition of a USP. That's the requirement that they say must be satisfied. Now, with respect, that to me seems directly in contrast with the amendments made in 2015 and the 2015 EM that explicitly said that that interpretation that it must result in an imposition of a USP, that to me, they've changed that to say no, it must simply involve a behavior. And to take that logic further, just mindful of time, what they said is the issue at the time the 2015 amendment was made was, and I remember this very distinctly, is they said that SARS had taken the view, or the VDP unit had taken the view, if people apply for VDP, but it was the cause of the default was a bona fide inadvertent error. And I'm taking you back to the amendments, or pre-April 2026 amendments, as when bona fide inadvertent error was the gatekeeper to the USB system, right? Then they said, oh, you can't apply for VDP because there's no potential imposition of an understatement penalty, right? And then they changed it to say, okay, no, we want to change that, because VDP gives you relief against what? Certain penalties and criminal prosecution, right? So there might not be a USB, but you might still potentially be prosecuted criminally. So this point of there must be a penalty, it seems again to me with respect that interpretation is strained. They also double down again and mention the fact that, look, if you're going to make a disclosure, for example, that you earned exempt income, that's not taxable, or foreign income and you're not a resident and it's not taxable, then you can't VDP, right? Because there's no tax to be paid. They seem to hinge it on the fact that there's no understatement, right? And what is fascinating, if we look at the definition of understatement, and that was the issue in Perlish, right, where the court had to interpret any prejudice to SARS or the fiscus as a result of an omission from a return. Right? Now think about this. That you won't find, at least I couldn't find it in their guide, but I wonder how much of this is just forgotten or ignored, and how much of it's on purpose. But anyway, that's a discussion for another day. In Perlish, the court said a prejudice to SARS or the fiscus within the meaning of the definition of understatement in chapter 16 of the TI deals with VDPs and understatement penalties could include things like resource allocation and opportunity cost, right? So, and in other words, I have to go, and SARS has to go and check whether or not your return is correctly filed. If you didn't file or declare income that's exempt, SARS still needs to go and check if it was declared, so there's a prejudice to them, so there's an understatement, so why can't I VDP that? And one might say, well, what's the point? Why would you want to VDP something that doesn't give rise to a tax liability? Suffice it to state that failure to declare income on a tax return remains a criminal offence, regardless of whether it's exempt or not. And yes, the chances of them prosecuting you are very slim, I suppose, but they could. And so this interpretation seems to be, no, VDP is just a cash cow. We will only accept VDPs when you pay us. If you don't have to pay us, go away. Right. They make again the point that full and complete disclosure is required, as we know, from the Voluntary Disclosure Programme requirements. They add here that if you've got a default on one tax type that stretches across several tax types, you should disclose the other tax types. And if at the time you're disclosing, let's say VAT, let's say it's a VAT apportionment issue which has some form of income tax consequence as well, right? Or whatever the case might be, then you can apply for VAT. And if you're not done with the income tax quantifications, you must say in your VAT VDP that I'm still doing that, I'm going to disclose that in due course to ensure that your application is full and complete in all material respects. So in other words, and what is interesting here is they say if it's one default spanning several tax types or more than one tax type. Now, I've looked at issues before where I said there's several defaults here. On VAT, there's defaults. On PAYE, there's defaults. On income tax, there's defaults, but they're none of them related, right? The question is, if I disclose the income tax, is the income tax VDP full and complete if I don't disclose the VAT default, which is entirely unrelated? And I think the answer is yes. Should you be disclosing everything? Yes, practically that would make the most sense. But here they talk specifically about the default spanning multiple tax types, saying that you have to disclose the multiple tax types to be sure that your application is full and complete in all material respects. Right. Similar defaults, we know there's a 5-year rule. You can't disclose the same default within 5 years of a previous disclosure, right? The VDP is not there for you to make mistakes and then fix it through VDP and then wait 5 years and make mistakes, right? So they say that if you've got a default, you can't disclose a similar default within 5 years, right, of a similar and the issue is similar default. Years ago, when VDP was just launched, or the permanent VDP, we had applied for a taxpayer. It was elsewhere, but it was a VAT apportionment issue. They had applied an apportionment method other than the standard turnover apportionment method without a ruling from SARS confirming they could use the other method, right? And we said to them, look, that's wrong, we VDP it, right? And then they said, okay, we applied for another, so we did that, they VDP'd it, right? And then they applied for an alternative ruling and started using it before SARS approved it, right? And SARS didn't approve it backdated. And then they said, oh, we want to apply again because we made, and it was a different apportionment method than the one they applied before they got the ruling, or the first VDP. And SARS said, no, you've already disclosed, and that was before there was a 5-year rule. That rule used to read, before I think 2015 amendments, if it's similar default than before, you can't. Now there's a 5-year cutoff rule, right? So SARS said, no, you have previously disclosed a VAT apportionment issue. What you're disclosing now is similar, so I'm not allowing it, right? This was years ago when I was elsewhere employed, but and so they just make the same point here, right? The same with PAYE. If you disclose failure to deduct PAYE in a fringe benefit, and 4 years later it's a different fringe benefit, but it's again the failure to declare the PAYE in a fringe benefit, they're going to say it's a similar disclosure, you're not allowed to qualify. Whether I agree with that is not a discussion we're going to have time for today, but anyway, that's just their view, know that. And by the way, when we deal with the VDP unit, you want to try and take the path of least resistance. When we fight with them, that's a different discussion, right? Then we are very aggressive and we argue and we do what we need to do. But when it comes to VDP, unfortunately, if they decide to reject the thing, your only recourse is a High Court review application, which, let's be honest, not everybody's going to launch, right? In my case, we did because there was lots of money involved, right? But you want to try and be as pragmatic as possible and accommodating as possible. That's not mean to say you must pay more tax than what's necessarily due, but you must be mindful that you are kind of standing with your head in your hands to a little bit because you've not paid taxes. So just keep that in the back of your mind with VDPs. People tend to confuse. When we fight, and we fight hard. But when we VDP, slightly different angle. Important to take note, this is something that comes up often. We know that one of the requirements for a valid VDP is that you must make a disclosure, right? So SARS, you must tell something that SARS doesn't know about. So when you have, for example, a failure to register for VAT and to declare VAT returns, right? That's something, or PAYE, it's something we've VDP'd many times before. But the practical problem comes in is the VDP unit does not deal with VAT registrations, and you cannot do a VDP without a VAT VDP without a VAT number. So can you see the conundrum? I have to go to SARS, tell them I haven't registered, and then go through the VDP. It's a problem, right? And so they said I don't know where they get this or what the legal basis is for this, but they say no. Their view is they'll give you 21 days if you disclose, if you register with the normal SARS unit. If you VDP within 21 days from the date of your application, then that's fine. Then they will pretend like you didn't disclose somewhere before. For whatever reason, and then they will allow you into. And they do say that they'll grant extension or they'll make exceptions depending on the facts. That's fine. But they do make the point, and this is important because I have seen this before. We did a VDP for a foreign company, and one of the issues was VAT. And you try and get a VAT number for a company that doesn't have a CIBC number. So we told them beforehand, VDP unit, listen, we're going to do a VAT VDP, but we're going to have immense difficulty getting this VAT registration through. In fact, we need your assistance. And so they do say that. Just say, look, you've got 21 days. If you think there's going to be difficulties, tell them before. They've got an email address, right? You can email them, and then they'll look at it. Right. The last thing they say is just to mention again the Medtronic case. We know that what happened in Medtronic is the taxpayer's accountant embezzled millions of rands from the taxpayer, and it resulted in VAT defaults, and then they disclosed their defaults through the VDP process, signed the VDP agreement, and then the VDP agreement said, okay, fine, we'll give you relief against the penalties that we're supposed to give relief for, but the capital and the interest remains payable. And then they filed a request for remission of the interest after they signed a VDP agreement. So I said, I can't consider it because you signed a contract that said you're going to pay the VAT, the interest. That went all the way, I think, to the Constitutional Court, who ultimately held you can't post VDP, we can ask them, but they can't consider it, right? A remission of interest. So the point is the tax and the interest in a VDP agreement is final. The Medtronic's judgment confirms you can't ask for interest remission after a VDP agreement has been signed. Suffice it, however, to state, I don't think it's in the guide, but suffice it to state that in this year's budget announcements, there was a proposal to allow taxpayers to seek remission of interest, so to amend the legislation to allow taxpayers to seek the remission of interest post the VDP agreement, but that is, as of today, is not in any bill, so maybe we'll see it in next year's round of amendments to see if they'll allow that. And I think it's crucial, just from a general perspective, the VDP, if you can't get interest remission, I tend to consider what are the other alternative options. because you might have a situation where there are circumstances beyond your control. You might get remission of all the penalties and the interest, but if you go VDP, the door's shut. So VDP, although often the go-to, is not necessarily and automatically the best possible result you're going to get. Right, just shortly, if SARS does not allow your VDP, if they reject it, you can do a Section 9 internal review, right? We all know what Section 9 internal reviews are. Failing that, of course, you'll have recourse to the High Court to have their decision reviewed, and then they'll settle if you show them. All right.